Well, welcome everyone. I'm Jay Lyman. I'm a librarian here with the Seattle Public Library, and I want to turn things over to our presenter here in a moment, but we just want to welcome you to the program and thanks for being here. Tiara, I'm gonna let you go ahead and take it away from here.
All right, thank you. I couldn't unmute and share screen at the same time. Can you guys hear me okay? Awesome.
Thank you, Tiara.
Awesome. Thank you, Jay. And thank you, Elizabeth, also for you guys with, the Seattle Public Library putting these on for our entrepreneurs and aspiring entrepreneurs and anyone else who's just curious about credit. It's not an easy topic, so I appreciate you guys allowing me to share what I know and my experience from myself and my clients. And if you were part of the other two workshops, this is the third in the series. So we started with kind of the more basics. What is credit? How can we benefit from credit? And then we talked about how to improve our credit score. If we have negative things on our credit report, what can we do to remove those? And what can we do to build credit? Today, we'll expand on what we can do to build credit and then kind of put it all together so that by the end of this, this workshop, you'll have a game plan of what you can do to increase your credit score and reach your credit goals. And then also as a bonus, we'll go into a little bit about building business credit at the end. And we'll have time for Q&A as well. So post your questions in the chat or save them till the end and you can come off mute and share once we stop the recording. All right. So the agenda for today, we'll kind of figure out what that game plan looks like. What are those three steps? And then again, building business credit and the Q&A. So when we talk about the game plan for good credit, it's important to know what is good credit. And when we're talking about our credit report, a good credit report is one that doesn't have any negative delinquencies. So no derogatory marks, as in charge-offs, collections, bankruptcies, late payments, anything that's negatively impacting your credit. We want to make sure that those are off. And it's not to say that you cannot have good credit if you do have negative delinquencies, but the less you have and the less recent that they are will provide you with the better credit. So the credit score ranges from 300 to 850. A good score is anything above a 670. But with the 670, you probably still have a few or a couple negative marks on your credit. So what I recommend to my clients is to shoot for a 730 credit score. And with this, they would be approved for anything should they need to use credit, assuming that the other requirements match, like income, depending on what type of loan you're applying for. So anything above a 730 is kind of the goal that I would recommend, but anything above a 670 is considered good. So the game plan, this is what I provide for my clients. So we focus on the rebuilding, the repair, and then providing them the education so that they can maintain good credit themselves. So the 7 strategies to take charge of your credit, which we'll go into. But the rebuild side is basically adding positive accounts to your credit report or optimizing positive accounts that you may already have on your credit report. So that takes care of the rebuilding, making sure that the accounts you do have on your credit report are optimal. And then the second part is the repair. So this is for individuals who, again, may have some negative marks on their credit report. And thankfully, there is a law and what some would call maybe a loophole that we could use to get those accounts removed from our credit. So you can look at your credit report and kind of figure out if you need to focus on rebuilding, repair, or both. And so the strategy that I create for my clients is focusing on both of those. And then again, once we clean it up and fix it, rebuild it, then we have the 7 strategies to maintaining that good credit. All right, so the first part of that is the repair, the rebuilding. Rebuilding for people who have credit established and just need to optimize some of their accounts, and then the building for those who don't have any type of credit and a thin credit profile. So let's see. Okay, so one option, for those trying to build credit from the beginning, is establishing those positive accounts. So when it comes to your credit score, you want to have 2 types of credit, both installment accounts and revolving accounts. Installment accounts are accounts that have a set term. They have a set monthly payment and a set amount. So those are accounts that you pay every month, usually on the same day every month. You've got a repeating due date, and examples are auto loans, personal loans, mortgages, student loans, any type of loan, again, that has a set term and set monthly payment. So you want to establish those types of accounts, and then you also want to establish revolving accounts. So your revolving accounts are your more open-ended accounts, like our credit cards. So our credit cards, we have a set limit, but it's not a set amount that we borrowed at one time. So you may have a credit card that has a $10,000 credit limit, but unlike an installment account would be maybe a loan for $10,000. So you do have a set credit limit with revolving accounts, but no set monthly payment, because your monthly payments are changing based on the amount that you are spending on that credit card monthly. And so once you pay back what you've borrowed on the credit card, that becomes available to you again. Whereas installment accounts, you pay on your auto loan, for example, and the amount given in the beginning is still the same. You can't borrow against it again. So those are the 2 things I would recommend if building credit is where you're at. You know, you may have just a couple things or nothing on your credit report. You want to start with establishing one installment account and then one revolving account. So one example of a revolving account is the secured credit card. You can get these through your bank that you currently bank with, or another credit card company, but it's important to make sure that you'll get approved before you apply. So a secured credit card is you putting up the deposit for the card, and then that deposit becoming your credit limit. But you can still get denied. So you want to make sure that you'll get approved for this card. My clients, if they're just starting out with credit, I recommend the Credit Builder card for them. That's a good one to know that they're going to get approved, and to establish that first line of credit. All right. And then let's go back, sorry. for a installment account, one that's really good to establish, and this is for people who don't have anything on their credit yet or who do and want to add something positive, but it's called Credit Strong, which we know that the credit bureaus want to see, and the lenders want to see two types of accounts, so installment and revolving. The credit cards take care of the revolving, and then the installment accounts are typically loans. And so if you're in a place where you don't want to borrow money, but still want to build your credit, there are products out there that report as a loan. So it looks like an installment account, but it's actually a savings account. So you're not actually borrowing money. A good one for that is Credit Strong. And I will post these links in the chat, and they'll also be in the follow-up email. Okay, so those two products are great for building credit, starting from the beginning. But if you already have credit, some options to focus on rebuilding are balance transfers, lowering your credit card balances, and increasing your credit card limits. So these all have to do with your credit utilization. So if you've already got accounts on your credit report, installment and revolving, and you just need to optimize them so that you can focus on rebuilding your credit, this probably means that you have balances being reported on your credit cards to the credit bureaus. Oops, sorry. I'm going to pause here to make sure that the interpretation is caught up, because I think I'm talking a little bit too fast. Okay, we're good. Sorry about that, Sarai. So if you are focusing on rebuilding, you probably have some balances on your credit cards. Maybe it's that you're paying them off. You pay them off every month, but they report to the credit bureaus as having a balance. So one thing you can do for that is, if you are able to pay them off every month, but your credit report shows a balance, you can contact the credit card companies and ask them what is the day that they report to the credit bureaus. And once you find out that day, then you can kind of restructure your payment date. So whenever you pay your credit card, you can restructure it to make sure that you're paying it 2 or 3 days before they report to the credit bureaus. So what this does is allow the credit card companies to report that low balance to the credit bureaus, and then you'll immediately see a positive impact to your score. And this is because it's impacting your utilization, which is 35% of your score. So that's one way to kind of make sure that you're optimizing your current accounts. Another way is the balance transfers. So if you are in a situation where you're not able to pay your credit cards off in full, one, that's okay. It happens. Credit is one of those things that we can leverage to our advantage and invest in ourselves or our business, or you just maybe had an emergency that you needed to take care of. So if you are in that position, it's okay. And there are things that you can do to kind of minimize the negative impacts of those balances. A balance transfer is one of my favorites. This is where you are transferring the balance from your credit card to another credit card, and then getting a 0% interest on that new credit card. So for example, you have one credit card and the balance on there is $5,000. You're not able to pay it off in full every month. So you transfer it to a new credit card that has 0% interest for 12 or 18 months, whatever the offer is. And then you're able to pay it down much faster. What that also does is adds more to your available credit. So once you get that new credit card, let's say the credit limit is $10,000. That's being added to your entire available credit, which will help lower your credit utilization.
Sarai, are you there?
Okay. I'm going to ask her if we can use the gestures again so I can know if I'm too fast. Okay, thumbs up. Thank you, Sarai. Thank you, thank you. Okay, and then the second thing, of course, is lowering your credit card balances. If you see your credit score changing every month, it's most likely because of your credit card balances changing. So that's one of the fastest ways that you can increase your credit score if you do have balances, is just by paying them off. And again, that trick of figuring out when they report to the credit bureaus and paying them off 2 to 3 days before that date is the perfect example. And then the last one is increasing your credit card limits. So this is maybe the easiest. If your score is, in that good category, you can ask your credit card companies to increase your credit card limit. Okay. And then again, just in increasing your credit card limits, what that's doing is adding more to your available credit. So if you're unable to pay your balance and you've got, let's say, I'm trying to think of an easy number I can do. So if you've got a $200 credit limit and your balance is 100, your utilization is already at 50%. But if you increase that credit limit from 200 to 300, then that $100 balance is only giving you 33% utilization rate. So just by increasing your credit card limit, you're lowering your utilization, and you want your utilization around 5 to 7% for the most points in that area. All right. So that takes care of the building and the rebuilding. If any questions came up, again, just post them in the chat or save them to the end. The next part of that is the repair. So we went over this in the second workshop to this series. So make sure that you watch the recording if you weren't able to attend. But I'll just quickly go over the steps to repairing your credit. And I'll start with the reason why we're even able to do this. So the Fair Credit Reporting Act was passed in, I believe, the 70s. And it was put in place to protect us as consumers. So the Fair Credit Reporting Act requires that the credit bureaus report 100% accurate information on our credit reports. And I've been helping people with credit for about 5 years, and I haven't seen one report that was 100% accurate. And the accuracies don't need to be that the account is accurate in it being yours, but there's little bitty errors and inaccuracies that you can point out to the credit bureaus. And if those are there, the credit bureaus have to either fix them or remove them from your credit report. So getting your credit report would be the first step. And if you're able to, just take a photo of this. And again, take a photo so that you have the steps, but make sure to watch the replay from the second series. Okay, so after you get your credit report, you want to look over it for those different errors. And again, the errors can be little things as in the date open is incorrect, the balance is incorrect, the date of last payment is incorrect. We're not pointing out, looking for errors of accounts that are not yours. However, you want to do that as well. But even with accounts that you know the debt is yours, you want to be looking for these little types of errors. And that's because of the Fair Credit Reporting Act that allows us to dispute those accounts. And once you do that, you want to figure out a game plan. So which accounts are you going to start with when you're disputing? And then just go in and start disputing those with the credit bureaus. And the best way to do so is doing it through the mail. So snail mail, writing a letter to the credit bureaus, and you can be as simple or as detailed as you'd like, but you want to identify the accounts that you're disputing, and then if you want to go into why you're disputing them. But the Fair Credit Reporting Act allows us to dispute based on any reason. So we don't have to point out the inaccuracies in the accounts. We can just dispute and ask them to verify it because of that act. Okay, and then once you do that, it's a process with the credit bureaus. Sometimes we do get lucky and that first round of letters that we send is enough and they delete all of the negative accounts that we were disputing. But more often than not, it is a back and forth with the credit bureaus. So you want to track every letter you're sending to them, and stay persistent, because they will respond to you with letters that make it seem like they are not doing another investigation. Everything is done, everything is accurate. But then you look at your report and you'll see those inaccuracies are still there, or different inaccuracies are there. So you want to just always follow up with the credit bureaus, even though it can be a little scary with their responses. And then the last thing is your rebuilding plan. So those two key parts of reaching good credit is the rebuilding and the repair. So you can be doing both simultaneously. And that's what we recommend with our clients, just to get to where you want to be the fastest way possible. But make sure that you're being persistent with the repair side of things, and then also being active with the rebuilding. All right. Okay, and then the last part is, okay, so we've reached good credit. We've done the rebuilding, we've done the building, we've done the repair, or you're in a better position and you already have good credit. How can we maintain that status? So these are kind of the 7 things that I recommend when it comes to maintaining good credit. The first, of course, is monitoring your credit. You always want to make sure that you know what's going on with your credit at all times. There's lots of scams out there, ones that we don't even know of. There's people creating a new one right now. So if you're not able to monitor your credit and know what's happening with your credit at all times, that can cause your credit to be impacted. So you want to have a service that is able to notify you of changes to your credit report at any time, so that the sooner you can act on it, the better. And so then also paying bills on time. We talked about this in the first session, but do whatever it is that you need to do, whether it's auto pay, having a money date with yourself, or maybe yourself and your partner every week to go through your expenses and make sure that everything is being paid on time. But one little missed payment can either cause a collection to be added to your credit report that you weren't aware of. It can cause there can be an annual fee on your credit card that you forgot about because it's due in 12 months. And, that's a little bit hard to remember just off the top of our head. So whatever you need to do to make sure that those bills are being paid on time will help with good credit and avoid late payments and collections, which are the two things that hurt your credit the most. The third one, don't close your old credit cards. So we talked about this one as well, but just a reminder, you want to keep your cards with the most history open as long as you can, because it impacts the average length of history on your credit cards, on your accounts in general, on your credit report. So if you're closing one that's got 14 years of history, that's going to impact the average length of history, and then in turn impact your credit score. All right, and then the fourth one, keeping a good mix of credit. So that's kind of the purpose of this workshop today, because we talked about revolving accounts and then also installment accounts. So you want to have a mix of both. That's 10% of your credit score, and really simple to do. And it's also important in establishing credit. So making sure you have revolving accounts and installment accounts. And then the fifth thing is to be strategic when applying for credit. So there are products that you can apply for in the same time period, so that you can shop around that will impact your score just once. So with one inquiry. So let's say you're shopping for an auto loan, and you want to go around to different banks or different dealers and see who can give you the best interest rate. If you do that shopping and apply for the credit in the same time frame, it'll only count as one inquiry. And then the sixth one is to keep your credit card balances low. So I think the best trick here, if you are someone who likes to take advantage of their credit card points, so using their credit card for most purchases that you can use it for, so to benefit from the rewards and just for the safety, because we know that using your credit card is safer than using your debit card. So it makes sense to use your credit card as your first option. But in doing so, your credit card balances can be high. So figuring out when to pay them, paying them 2 to 3 days before the statement date kind of helps with keeping your credit card balances low, but also being able to leverage credit and get the benefits of credit and the safety. And then the last thing is to dispute negative items on your credit report. So let's say you've got great credit now, you've cleaned it up, or you're just in a great position now, and you get a medical bill on your credit report from something that you thought your insurance company was handling. The best thing you can do is, if it's already on your credit report, is to dispute that item with the credit bureaus. So going through those steps that we just went through for anything negative that hits your credit report. The other option there is to wait and do nothing, and it will stay on for 7 years. And the other option is to pay those collections that are on your credit report. However, it will not help your score. So those are kind of the three options: to pay it and still have the negative impact to your score, wait for it to fall off in the 7 years, or dispute it with the hopes that the credit bureaus will remove it from your credit report. So using the Fair Credit Reporting Act to your advantage. All right, so we will save questions till the end, just so that we can have one good recording. But I'll give you guys a minute or two to maybe write them in the chat if you have anything on the personal side before we switch gears to business credit. So I will pause for a minute or two. All right, we'll keep it going so the people watching the recording don't have to pause also. Okay, so moving into business credit, which is one of my favorite topics, because when it comes to business, one of the biggest reasons businesses fail is because of cash flow problems. So not having enough money to sustain the business. And a solution to that is using other people's money. It's what the rich people do. This here is a quote from Kim Kiyosaki, who is an investor and entrepreneur, who says, "My favorite business strategy is using other people's money for my investments." So we know that there's many different options when it comes to using other people's money, but the goal to kind of prove your business so that you don't fail because of cash flow issues is by having 12 to 18 months of expenses available to you at all times. So that available to you could be sitting in a savings account, sitting in a bank account or checking account, or it could be in the form of credit, having a credit line already available to you, just sitting there, or having established personal and business credit so that you can go to a bank and get access to that capital at any time. So aside from credit, there's lots of different investing routes that you can take. So having a venture capitalist, an angel investor, there's different programs you can participate in, like accelerators and pitch competitions. There's lots of different options. And as a small business, it's important to get creative when it comes to this 12 to 18 months of expenses. But making sure that you can access it in different ways. Because as small businesses, it's not common for us to have an investor, begging to invest in our company. So it's important for us to really position ourselves to be able to use credit as a backup if none of the other options are available. All right. So before I go into the how to establish business credit, I want to first rewind and talk about what is business credit. So business credit is credit that's issued in your business's EIN rather than your personal social security number. So if we go into a bank and we want to get a business loan for our business from our personal account, one, some banks will not approve that because they want you to do it through your business. But then two, if we do get approved, the amounts are much lower than what we could get approved for with our business. And then the third thing is that credit would be on your personal credit rather than your business. So there's the benefits of business credit is having that credit that's separate from yourself, and it only being in the business's EIN, which is the employee identification number. So all business entities can establish business credit unless you are a solopreneur, because if you're a solopreneur, you're using your personal social security number to report and to report your business income and report taxes. So as long as you're an established business entity, you can access business credit. Okay. So the first step in establishing business credit is the credibility. And we'll go into each 4 of these steps. Second is vendor accounts, and then retail credit cards, and then other types of credit. All right. So the first step is credibility, which may sound weird because we all know that our businesses are credible, but this whole step is just making sure that your business is credible on paper and in the eyes of a lender. So when businesses are applying for business credit, there typically are huge corporations. So Amazon and Netflix and Walmart, these big companies. And so their businesses are structured in a way that make them look credible and look like a corporation. So the goal with the credibility, the first step, is to do that with our business. So having a credible name for your business is pretty important. And you want to make sure that that name is the same across all places. So your website, your email, all the listings that you're on, and not just your business name. So your name, your business address, your business phone number, making sure that that's not your personal cell phone number, having a fax number, your website, and your email. All of those, all of that contact kind of identification info should be the same across the board. And for example, when it comes to email, I'm going to turn my camera off because the sun is crazy. For email, you want to make sure that it's using the same domain as your website. So you don't want your email to just be tiarabonds@gmail.com. You want your email to be tiarabonds@takechargecc.com, because the Take Charge CC is my website. So whatever your website domain is, you want to make sure that you have an email that has that same domain, and that when you are applying for credit, you're using that email rather than tiarabonds@gmail.com or our embarrassing email that we made in high school. So we want to make sure that it is professional, but most importantly has that domain name, so that they can see that this is a credible business. And then of course your EIN, which you get through the IRS. Make sure that your entity is established. So again, any entity except solopreneurs. Make sure you have all of the licenses that your businesses needs in addition to bonding. So some businesses need bonding as well. Your business bank account, just making sure that you have one that's separate from your personal, or at least the accounts are separate. So you have a business checking, and that the information that you use with that checking account is all of your business info. So you don't want to use your personal phone number unless there's a way you can have it as a secondary, but you want to make sure that all the identification info is for your business and not for your personal. Okay. So that's the first step, the credibility. Let's see. All right, we'll move to the next step. The next step is getting vendor accounts. So you want to make sure that you know, with our business, we have a lot of expenses, right? But most of those, I can almost say all of them are not being reported to the business credit bureaus. So the expenses that we have, we want to add expenses that do report to the business credit bureaus, because that's what establishes business credit. And so on this screen, you'll see a few of them. But basically the goal is to purchase accounts or items through these companies because they report to the business credit bureaus. Determine what the amount is that you need to spend with the company. Usually it's about $50. And then determine when you need to pay it so that they report to the business credit bureaus. So let's say we're shopping for shirts with Shirtsy. We're getting some branded shirts, which I need to get some new ones now that I think about it. And we've got our invoice. These vendor accounts usually will provide net 30 invoices, which means you purchase your items and you have 30 days to pay it back. And within that 30 days, if you pay it early, your business credit score is an A. If you pay it on time, your business credit score is a B. And then the later you pay it, your business credit score goes down from there. But the first step is just establishing that net 30 term with the vendor, purchasing your items, figuring out when you can pay them so that they do report. So you don't want to purchase them and then pay them the next day because they probably won't report that to the business credit bureaus. So you want to reach out to the company, figure out the soonest you can pay so that they still report to the business credit bureaus. And then you want to have 3 to 5 different vendor accounts on your business credit. So picking 3 of these accounts. And then within those accounts, you want to have 3 to 5 payment experiences with each vendor. So you don't just want to go to Shirtsy one time and do one order and be done. because you want to build those payment experiences. So you want to do at least 3 with each one. So it's important to choose vendors that you can actually order products from. So this is another place where I would maybe take a photo. And I'll also share a business credit checklist, actually, so that you can just follow those credibility steps and then the vendor accounts, and these will be on there. All right, and then step 3 is retail credit cards. So this part may be a little bit easier because you may already be purchasing items from these retail stores. So instead of going to Target or Staples and getting your office supplies and using your business checking account, or your business debit card, you can get retail credit cards with these stores and purchase those products on your store credit card rather than your debit card. You'll get points back, whatever the reward system they have, so that's a benefit. But then you'll also be building business credit, so you're able to establish and further build your business credit after the vendor accounts. And then you also can leverage credit in this way as well. So maybe you have a big event coming up and you have to order, some extra supplies, but you're not getting paid for this event until after the event is over. Using your Target card, you're able to put those items on your credit card, not have to pay it today. And then once you get your payment and your revenue from that event, then you can just go ahead and pay that Target card off, rather than having to use your business debit card and impact your cash flow that way. Or like a lot of entrepreneurs do, just use their personal, or pay for these items with their personal account rather than their business. So again, that big reason businesses fail is because of cash flow. So business credit allows you an opportunity to hold on to your cash longer and purchase things through credit. And this is not paying interest. So this is, with credit, you're able to leverage it in a way where, with the vendor accounts, you're getting 30 days to pay it. We want to pay it early, but you're getting around 30 days to hold on to your money before paying that out. And the same with the retail credit cards. Cool. Oops. And then the last step of business credit is applying for other types of credit. So this is where you can do loans and credit cards in your business's name. It's important to note that some of these will still want to use your personal credit as a guarantor. So although the loan may be in your business's EIN, in order to approve you, they often will still want to use your personal credit as a guarantee. So that should you not be able to pay the business loan back, they know that you as the owner can pay it back personally. So it is separate from your personal credit because the credit is in the business's name. But it's important to know and not forget that you still need to be focusing on personal credit and making sure that you have a good personal credit score in order to leverage business credit. And so again, the biggest goal here is, it's different for everyone. Maybe for you, you do need access to capital right now. So these steps would be great for that. But maybe for most of us, it's just being able to access it. So should another pandemic happen or an emergency or just an opportunity come your way and you need to do a little investing in your business first before being able to say yes to that opportunity, you have the credit available to you. and then just to sustain our business. So we know that one of those solutions to survive in business is by having 12 to 18 months of cash flow of expenses available to you. So business credit is a very simple, it's a process, but it's very simple to be able to access the credit that you need through business credit. All right, and then the last slide. I love talking about credit. I can do it in my sleep. I do it for fun. I do it for work. But it doesn't mean anything if there's not anything that you can take away from it. So I always like to provide, actionable steps that you can get started on right now to improve your personal and or business credit. So the first one, for personal credit, if you haven't already, just get your report. And I know it sounds maybe scary or challenging, a little frightening, to look at to first know what your score is, but then also to look at it. It's not an easy thing to understand, but just get your credit report, go through it. If you need to look at the replay of session 2, we went over the credit report. So then you can kind of use that as a walkthrough to see what's going on with your credit. Identify those negative derogatory marks, so anything that's hurting your score, and create a game plan to work on disputing those. So whether that's hiring a reputable credit repair company, whether that's doing some research on your own and figuring out how you can go about disputing those, whatever it is, figure out what you're going to do on the personal credit side. But the first step is getting your credit report. And then for business credit, again, even if you're not in a position to need business credit now or need access to funding, and you have 12 to 18 months of expenses available to you, it's still beneficial to have business credit established, just in case you do need it for again, an opportunity that could come by your way. So I'll share the business credit checklist so that you can get started on that. All right. And then lastly, a bonus for Seattle Public Library on the personal credit side. So when it comes to getting your report, those first steps are just kind of analyzing it, going through your report with a fine tooth and figuring out what those negative items are that are impacting your score. Also learning the positive one. So seeing that your credit card has been having on-time payments for 56 months. That's something good. You want to celebrate those things too. But most importantly, identifying those negative accounts and then also those errors within those negative accounts so that you can use that to dispute. We will help with that process. So this is kind of the first step that we do with our clients, just so they can see where they're at with credit. It's about a 16 to 20 page document that identifies what's going on well with their credit, those positive accounts, and then where they can make some changes. So it'll show you the exact accounts that you should start working on to dispute. And then it also has a lot of education in there. So some of the things I explained here. But again, the first step that we do for our clients, and then we, go to do the repair for them, create their rebuild plan. But this just gives them an idea of where they're at. And it may be better than what you think. So that's always a good thing too. But if you get your report from Identity IQ, which we'll post the link, email it to me with the subject line bonus for for Seattle Public Library, then we'll email you that credit analysis so that you have that document. Then you can use that to go and start repairing and rebuilding your credit from there. So it's a very, very, very good first step. You have to do the first step of getting your credit report, but then we can help you to make that process a little bit easier when it comes to repairing and rebuilding your credit. Cool. So if anyone has questions that they want to type in the chat, we can share those now, and then I can answer them. For the recording, people on the recording might have the same questions. So we'll give that a couple minutes, and then we will switch to, then we'll stop the recording.
Wonderful, Tiara. Thank you. There's so much there.
Of course, thank you.
We appreciate your putting all this together and sharing this with us.
Of course, my pleasure.
Wonderful. If there's any questions from anyone on the event, type them in the chat. Otherwise, we'll cut off the recording and move on to the next phase here. Not seeing any, so I think we could probably say goodbye to folks. And first of all, thank you to Tiara. Thank you to our captioners. We really, really appreciate all of your work in happening in the background to make that captioning happen. Thank you to our interpreters. Thank you, Sarai, for your work here. So useful and important. And thanks to the rest of the production team that's also here too, working in the background. So thank you so much.
Thank you all. Thank you all. And if you're watching the recording, you can also email your credit reports to get that extra help. So thank you, everyone.